might want to put down that cup of coffee for a moment. We have two traders who are fully caffeinated and revved up for Traders Unplugged. Joining us now from the trading floor of CME Group, options heavyweight Knuckman and Flynn, who's a black belt in oil futures and also a Fox Business News contributor. Good morning, and here we go with round number one. Fiscal cliff or pothole? Will the country go back into recession if the tax breaks expire and spending cuts are initiated?
I don't think so. You know, the bottom line, the market has been talking about being on the edge of this cliff for some time, and I think if we go over it, it might actually be a good thing for the economy, at least short term. Whoever the next president is going to have to make some tough decisions at that point, and depending on which way it goes, bottom line is, I think it will not be as big a deal as people are fearful.
The price action is telling us something completely opposite, obviously, with these new post-2008 highs that we're seeing in the equities markets right now. And I'm really not afraid of income tax rates going back to where they were under Clinton, because everybody made money back then.
Right. Of course, if we have 8%, 9% unemployment, and some people say that that's what will happen if these go into place. So,
well, that if.
Well, the bottom
and if
line
I was wearing your glasses, I could see better.
We have to move on to round two. Bonds bubbling. Are rates going higher or lower?
I think it's a healthy sign that we've seen yields move up. We've seen a half-a point move in the 30-year over the last couple of weeks. We've seen a little bit of a break when we hit the 3% resistance, but I think the low rates are kind of behind us. That was really because of fear-driven, had pushed the treasuries that much higher.
You know, I'd like to agree with you, but I can't. I mean, look at the Fed minutes earlier this week. The Fed is telling you, hey, we're on the verge of printing more money, folks.
Okay.
That is very, very negative interest rates. Let me tell you, that's really making interest rates below zero. So
rates have to go up eventually. They can really not go down that much more.
I agree with you, and I think after the second term of the Romney administration will be there.
Your longevity span isn't probably that long of a time window.
Yeah, probably not.
Ooh, round number three, scoring retailers. Gentlemen, retail stocks are up. Which ones do you buy now?
Well, retail stocks are interesting because most people think the consumer's not spending money anymore, but that's really not the truth. The year-to-date XRT is up 15% versus 11% for the market in general. So there are stocks that have done very, very well in retail, but you've got to pick and choose.
You got to pick the old people stocks. That's the ones that are doing good. I am serious here,
I'm
Alex.
looking at my number.
The mall is dead for the young people. Look at the
stocks
that are doing good.
American Eagle? Is that an American Eagle?
The bottom line,
they're up 43% a year.
Hey, this is my point here. The bottom line is
are those Foot
retailer
Locker
is
shoes
changing dramatically, and they're going to be buying them online because it's a lot cheaper for the kids to buy stuff online.
Foot Locker's up 42% on the year.
If retailers are going to compete, they have to use their stores as a showroom, have it very entertaining, because the bottom line is the retailing world is changing. The old box stores are going the way of the dinosaurs.
Bonus round. Who said this famous quote? Rule number one, never lose money. Rule number two, never forget rule number one.
Oh, that's a good one. Who would that be? That's a good one.
Who
That is a great one.
Warren Buffett.
I was going to say Warren. That was good.
I thought it would be an easy one. Knuckman, Flynn, thank you.